Alright, hey guys. I'm going to be doing this kind of YouTube channel. The main purpose is I'm using it as my trading journal, and I'm not really sure what my videos will contain. Most of it's just going to be like what my thoughts were during, specific time periods, what my analysis looks like. Ideally, I'll use it, as a way to get better, seeing if maybe if my analysis is progressing, if it's still staying the same, if I'm doing different things. But one of the biggest reasons is also just tracking my emotions during, like for example, these huge drops. What was in my mind, as this was going down, because later on, when it's potentially up here, I want to know what was going on over here in my head. And I do keep a written journal right now. But I think just having it in a digital format all in one place is gonna be pretty nice. So that's what I'm gonna be doing. I don't know. I'll try to keep them like 15 to 20 minutes long. I don't know if I'll do one every day. Probably maybe once or twice a week, something like that. Um, Maybe I'll do a couple of coins, so that might increase the video content as well. But I mean, for the most part, all the coins look pretty much the exact same right now. This huge drop going on. But in this first video, I want to do just a quick tutorial on what I do and how I do it. I'm not going to go into too much detail, but a lot of people have been reaching out, especially as over the past year when stock markets are going crazy and the crypto's going crazy. Everyone's becoming a trader and an investor. I just the amount of people reaching out, I want to have like just a spot to point them to that kind of shows them, okay, well here's what I do. Um, Here's how I do it. If you like that, if you think that's interesting, great. You could keep watching some of my videos. They're not going to be as tutorial based, but at least you'll have an idea of what I do. Now, if you are a beginner, I really would point you to this guy's YouTube channel. He's going to have, like an intro. It's just going to be far better done than what I'm about to do. So I would just give these videos a watch. Um, it's good stuff. And this guy, Trade Devils, go to their uploads and go to like their first couple videos, just to get like an idea of what they do. But this is the people that I learned from. Um, I started watching his videos back in 2017, and that's kind of when I started trading, picking it up as a hobby, and then I went full time almost 2 years ago now. Um, and these are the guys that I learned everything from, and they do every asset class. I would say they're pretty crypto heavy, but they definitely are going to have other types of asset classes. And that's the beauty of technical analysis, is it doesn't really matter what the asset class is. It just it's the same. So with that, I'm going to dive in here. This is TradingView, and I'm going to take some liberties that you know what that is and that you know how to read a bar chart. If you don't, I really would recommend that you just go here, watch this guy's videos. He'll set you straight. Okay, so the three things that you're going to see me doing a lot in my videos, and the main one that I use, is fib retracement. Okay, and it looks like this. So the idea is you're measuring something. You're measuring the distance of something. So like if a stock goes up like this or an asset goes up like this, you're going to measure from the low to the high. And then, it starts coming down. Maybe it comes down here. So the idea behind what I do is I'm trying to identify high probability areas to be a buyer. And when a stock is starting to come down or an asset is starting to come down, where do you buy in, right? That's the $1 million question. And I can tell you that no one's going to have an exact answer. It's not like a crystal ball. It's just all about probabilities. It's identifying good areas to buy. And this area is where you want to buy. These are numbers. Sorry, maybe I should back up. When you measure something, you're measuring the total distance of it, and you're measuring where it retraces to. So this is like a 38% decrease. Is 50%. This is the golden zone. This is where you want to definitely be looking to buy 618. So the retracement amount. Then you got the 786, 886. And these are Fibonacci numbers except for the 50. And this area is a good buy zone. This is a high probability buy zone, any asset. And this is kind of where you want to be a buyer. And this tool helps you identify where that is. And if price does kind of ricochet out of here, where do you sell? Well, this tool also gives you, if it's set up correctly, and I'll show you real quick, settings. It's the -236, -618, and then -1. And then there's a -618 or 1618. But you really just need those three. And that's what gives you this line, the -236, -618, and the -1. And these are profit targets. How does this method work? Essentially, this is how computers are programmed. Algorithms are programmed to trade some of these markets, and these are where they're programmed to take some profit. This spot, and this spot. And I'll show you real simply how this works on an actual, coin here. Uni is a great showcase for this. So, using what I just showed you, what you want to do is identify key pivots or key swings. And what that is like, where's the lowest spot on this chart that you can see? It's like, besides where this asset started. It's this spot. And where's the highest spot that you can kind of see in this area? And it's up here, right here. And this is where it starts to get tricky. Is it here? Is it? Do I pull from here and do it? You just got to log some hours doing your own kind of analysis and training to be able to start identifying. This takes you 2 seconds when you know what you're doing. It's just your eyes just immediately gravitate towards it because I've been doing it for so long. But the idea and the premise behind this tool is extremely simple, and so is the strategy once you learn it. So let's just take this, okay? So we measured from down here. I'm going to take this side volume off so I can show you something. We're kind of going to do it in real time. So you kind of see this coming up. Okay, we have what you do. So you see this asset going up. You're like, okay, is this the high? Is the high in? We come down to the 382. Oh shit, you might think, oh, I missed it, because your buy orders are sitting down here. We go up. You keep pulling. And finally, you would have got it. You would have been real quick on the draw though. We come down to the 50. That you should have had an order sitting there. $3.13. You want to be a little bit above it. Maybe $3.15. Anyway, that's where your first order is sitting, and you want to ladder your orders in. You don't want to just have one big juicy order sitting. You kind of want to average it down. Maybe have 4 or 5 orders in this area. So we come down, hit the 50. Okay, looks like me might be off to the races. You keep just pulling this over. So now you're in profit. You bought at the 50. You're going to sell up here. That's your target. You're not selling, and you're not getting stopped out until you go below this 618 either. So you're in the market. You bought in at 315. You're doing pretty good. Okay, well, we come down. Another dip. Come down to the 50. We bounce off of it, and we break it. Now we're going lower. Hopefully, you've gotten more orders filled. So now you have a good position in this. So now you've got some orders filled in here. So let's just keep pulling it over. So you're not doing anything. You put your stops in because this could have kept going down. But for now, you're still in. And you're going to take profit here. You're going to take profit here. Just chilling. Okay, boom. So price went up. It went back down. No need to panic yet. Didn't break the 618. You're still just in this. And just to give you an idea, from when your first order filled to when your profit is being taken, that's, almost 35 days. But, see, this isn't always just day trading. This isn't just take profit here. You can, in my experience, especially in crypto, since these swings are so big, and and this is personal preference. I mean, you could have maybe taken some profit every time it comes up and then rebought in, and take some profit, rebuy in. Personally, I think I've missed out on a lot of trades trying to do that. I think the best thing to do is stick to your guns. You bought here, didn't get stopped out here. If you wanted to, you could have probably put a little bit more on, depending on what your position size was. But again, I'm just showcasing you how I use the tool. So again, first profit target, and you get this reaction down. Boom, second profit target. So now you would have taken a certain percentage out. And again, this is where it gets personal. How much do you do? Do you take, 50% here? Do you take, 75% here, 25? Everyone's different. I always take some profit here. So I'm not going to go into those kind of details, but again, take some profit here. You take some profit here. Did we get to third target? No, we don't. Okay, so let me kind of take a break here. So just to recap what we did, pull from the low all the way to the high. And one other thing to note, and I don't want to go into this during this video, but I also am an Elliott wave trader. And again, if you go to Trade Devils, the people that I learned everything from, they are Elliott wave traders as well, and they use it to a high degree. I'm a very basic Elliott wave user in the sense that markets markets trend in 5, and in respect to this, what you're seeing here is how you would kind of label that. So what you're seeing here in theory is what you're seeing here in actual, real time. And how you would maybe even, and this is where you can get, again, Elliott wave is extremely subjective. If you put 10 Elliotticians in a room and tell them to count a chart, depending on the complexity, you might get a lot of different answers. The real benefit of it is labeling a chart, but it gives you a roadmap on where we are in markets or where we are in a trend. Like for example, you could probably make this work. And then the next part of the theory is that things correct in 3-wave structures. Now, real quick, this can be in any direction. You might correct in a 3. So it works in any direction. Just saying that markets trend in 5s, correct in 3s. And you might call that an ABC. So I don't want to go into Elliott wave theory. Trade Devils uses it quite a bit. So if you're interested in it or want to learn more, they use it quite a bit. They don't do a bang-up job at going into extreme detail on how to do it, but they do have like a trading course that you can do. So I do recommend these guys, and I recommend this guy, for getting your feet wet. Where was I? Uni? I think I was in uni. Yeah. So that's that's theory, and that's real use case for it. Let me get some of this shit off here. Okay, so this technically, this area is done. We've taken profit 1, we've taken profit 2. Now what you want to start doing is pulling from the area that you just had a clean pivot from. So this low, that was the new low that was put in, not this low. So you don't want to pull from up here to up here. You want to pull from this new area that was significant before profit taking. So I'm pulling here. I'm going to just keep doing what I did. So right now I'm up here, just took profit. Just kind of going to watch this, keep pulling it up, real time. Okay, perfect. Boom, right to the golden zone. So again, you're a buyer here, you're a buyer here. I'm not a huge support resistance guy, but I do keep it in mind. And so what support and resistance is, again, if you don't know, watch the other videos I've just been shilling the whole time. If, price sometimes will hit something, a level. Actually, that's probably easier to do. And it just can't seem to break through it. Kind of just say, okay, it's kind of seeing some resistance there. And then sometimes it'll break it and then retest it and then go off to the races. So that's kind of support and resistance in a nutshell. And this is probably a real world example of it. So you see like price struggled to get through there, price came down and tested it. So there's a lot of different strategies that you can employ here that would have been successful on this trade. But in theory, you can combine different strategies to create areas of confluence or areas of multiple indications pointing to a high probability zone. But again, you were a buyer here, and it came down right to your buy zone, and then take profit one, pull it over, take profit one, take profit, just comes right to it, just ticks it, and tries to go to profit three, doesn't make it. So you would have done it again, pulled from your good pivot that you just had down here all the way to the top. It comes down right to the 50. Probably didn't get any orders filled down here, obviously, but you probably got at least an order filled here, and then again, off. Then we just explode off to the races. So that is how this tool is used on a chart. You're going to see me use it a lot. So I did want to at least talk about it. The next tool that I use is called, it's a fib extension tool, and it's right next to the fib retracement tool, trend-based fib extension. You can star them, get a little hot bar up here. That's what I do. And what this tool is used for is, let me just keep doing this just because it's easier. Everything is related to each other. This structure is going to influence this structure. And so the point behind this tool is identifying probable areas that if this structure holds, so I'm going to measure the distance of the 0 to the 1, so I'm measuring how long that is, and I'm going to measure it from here, and then I'm going to project it. So like this is 100%. Exactly. So the distance from here to here, copy and pasted from here, it goes up to here. Now, threes in Elliott wave theory are the most common spot, is like the 1618 or the 2, somewhere in this range, probably the 2618. And it's useful for, creating a roadmap that makes sense, or trying to identify where high probability areas do exist. You could say, well, let's look how far this thing went in relation to that. The 1, 2, 7, 2, you're going to see that a lot, that these lines get tagged. So it's a way to time entries, and it's also a way to time profit taking. So that's what this tool is used for. And Bitcoin actually has a really good structure to showcase it. So again, talking about Elliott wave theory, I'm not going to go into the nitty gritty details, but probably a 5-wave structure in here from, beginning of time, not to scale, but the point is we've completed something, and it's probably a 5-wave structure. And now we're seeing what right now looks like a 3-wave structure down. Okay? So that is the extent that I'm going to show Elliott wave. And again, Trade Devils will go far more into detail of it. And there are rules that can't be broken. There are a lot of rules to help guide you drawing or marking your charts correctly using Elliott. And again, if you Google it, you'll get a quick and dirty on what those rules are, how to do it. And it is a very subjective and difficult thing to use. And it takes a lot of, it's kind of like learning another language. It's just, you got to do it a lot, and then all of a sudden you're never going to look at a chart the same way. But I won't go too far into it in any of my analysis or even in this video. But it is good to know at a basic level, things trend in 5s, things retrace in 3s. And this concept of 3 pivots is very important in my strategy, and I really think in any kind of trading. These pivots start to become related to each other, and that is really what you want to focus on in this strategy, and that's what you're going to see me focus on in this strategy is pivots, and usually in the shape of 3s, because again, if you see something go up and you want to understand the retracement of it, you're going to need 3 pivot, 1 pivot, 2 pivot, 3 pivot. If you want to measure something, you need 3 areas to measure from. So 3s are really kind of a key symbol in this strategy. And again, so ABC down, this fib extension tool is going to help me understand where the high probability areas are if this is an ABC to buy from. Here's the 100%, here's the 172 or 1272, and here's the 1618. All very common areas for a C to N. Now, the 1618 is a little bit extreme for a C to end. I would say it's on the higher range, but definitely a valid target and it's still probable. The other thing that, I don't want to go too much into this, but yeah, that's what this tool is helpful for. And that helps me identify that, do I want to be a buyer here? Yeah, for sure I do. There, that's what that tool is used for. Now, I've done all my fib extensions and kind of this, you've seen me draw it, from bottom to top. Look, we get a 50 here. We get basically the algo target there. You can do it in the opposite direction. So again, I'm pulling from up here. I'm pulling down. So I want to see how far price penetrates up towards the top. And what happens here is you start to see some congestion around the gold. We poke through it, which is a little sloppy. Markets aren't perfect, but this golden zone seems to hold it, which means you start seeing targets down here. These are your 3 kind of key target areas that you want to start eyeballing. And if you draw this fib channel or this fib line, like I've kind of been showing you, all the way from the bottom all the way to the top. Here's the 50. Here's the 618. This area again is where you want to target. So I know for a fact that I had some buy orders sitting here. I had buy orders sitting here. I had buy orders all the way down in this area. And what I tend to do is put my meteor ones on actual areas of confluence. So I had a decent buy order here. I had a decent buy order right on the 50. And so that kind of gives you an idea of how I'm identifying areas, and how I'm using these tools in concert here. Let me put this one on. So again, there's a hot box kind of in this area. So that's 2 tools being used to identify areas that you want to be a buyer. So I'm using one to pull from all the way to the bottom to the top. I'm using one in the opposite direction to identify, algo targets, no different than these algo targets. Because if this holds, if this area holds, we start working our way back up, this is where profit targets are. And it might seem insane that is Bitcoin really going to go this high? Well, I've stopped putting limits on crypto and what it can do and what it can't do, especially after this last run. So if this pivot holds, that's where I'm looking to buy or sell. So, and there's other analysis that you can do and that you'll maybe see me do, but this on a basic level is the meat and potatoes of what I tend to do. And the last tool that I use, again, using this concept of 3 swings, this 3-wave structure here, this 3-wave structure, is called a pitchfork. and it's called Andrew's pitchfork. And what it is, it looks like this. So you need one pivot, you need a second pivot, and you need a third pivot. Well, conveniently, we do have those, right? So you start here, put it here, and you do want to make sure this is exact. I'm kind of just doing this pretty quick. Let me go down to a smaller time frame so you can kind of see what the hell's going on. And there's some subjectivity in where you want to draw it. Generally, it's like the highest high, the lowest low. And so, I mean, look at how nice that looks. The idea behind this pitchfork is it's going to encompass price action. And how do you know that you've drawn your pitchfork right? Well, you're going to see price bounce off this median line or hover around it. And I mean, I can't make this shit up. I mean, it's just perfect, right? These extreme volatility can kind of start getting outside the channel, but for the most part, you can kind of see it's contained. And you can, just FYI, there's different ways that you can draw this. Shifts, modified shift. Maybe if you've just drawn it, this thing. Maybe if you've just drawn it, you have no idea what the hell's going on. You're like, you know what? Modified shift kind of looks like it's, might look like it's working. And that is, in my opinion, a slight downfall of this tool is that it does give you these options. I tend to use original unless it looks ridiculous, but I always try to make original the default. But there are these other options that a lot of times can, you'd be surprised at how often, inside or modified shift it does work. So like right now you might think, okay, well, like, wow, this is definitely looking okay. And now you'd be like, okay, we're either out of this channel, or you might even put it on original and say, oh, this is actually encompassing it better. Again, I default to original unless proven otherwise. And then one last thing you can do is you can go to settings and you can actually add on a little bit more. In crypto, it kind of is worth it. I don't like using the two. It's a little too extreme, but in crypto, you do tend to get some crazy volatility that can poke at some of those. So it can be nice to have on there. But for now, like just to keep your chart clean, use what you need. And that right now is just the standard, the 1 and the 0.5 and the median line. So this tool helps you like time your entries off of channel walls. So if for some reason you did think, there was confluence here and you wanted to be a buyer, and then you also saw the median line here, you could have bought in. Now, how did this help me, identify my entries down here? Well, I knew that this thing was confirmed here. I mean, I just knew that this looks like what you want to draw a pitchfork on, and that the original seems to make sense. And I also think the original seems to make sense because it's price stayed within this kind of golden zone. When you hit the golden zone, the original tends to be the one that that you want to go with. If you start getting extremer price action, maybe price went up here or something like that, that's when I start to think maybe a shift makes more sense. You might see that on some of my analysis that I use shifts or something else, and sometimes it's dictated by where price actually went. But anyway, original is what I used here. So let's put it all together. So sometimes to keep my chart from looking too insane, I'll just put like little lines here so I can see where my algo targets are. Just like this. That way I can get this off, as long as you remember why you put it there. And then I'll do the same thing, for my extension. So, and I'll just kind of mark some of the high areas. This can get a little sloppy. I don't always do all of them, but just so that I can showcase it for you. Let me go on 8 hour, just this is insane. So the reason I'm pulling from down here is because this dip is so extreme. There's nowhere else to pull. I mean, originally, like before I knew how deep we were going here, I was pulling from this pivot. And I thought that this area was a good buy, and I was a buyer here, and I got stopped out basically immediately. I think I put my stop at like 39.99 or whatever. Got stopped out. Then I immediately rebought in, like down at these levels. But just to showcase, this doesn't always work. I was wrong here. This was a good buy. I would do this buy again. There was nothing wrong with this trade. It just didn't work out. Again, this is probability based. It's like blackjack. When you get an 11, you double down. Sometimes you get a 2, and it sucks. But it was still the right play. So what you're actually doing is pulling from the last crash, which was March 2020, and that's where you get these big pivots, these big fibs. So now that we have the pitchfork on there, we have some of these earlier boxes that I drew. And I know this is out of the question because I already traded that and I got stopped out. So now you have these. These are a little high for me. They're above the 50, and I don't like buying above the 50, especially now that I have this pull on. I kind of want to be a buyer between the 50 and the 618. So I'm going to remove these two. Now I'm stuck with these. So, and now I think, okay, wow, like as it's going, you don't know exactly where it's going to be timed. Like this pitchfork helps you kind of time your entry. So, I had to kind of be awake. This was a crazy night. I was definitely awake. Let me go to the hourly and really show it. So this was a great buy here on this outer wall. And this is where I started laddering in. It was kind of along this outer wall. I definitely put a buyer. I always put a buyer on the 50, so I bought in at 34 for sure. But you can average, weighted average, you ladder in your orders so that your low weight is kind of up front and you have your orders here. And I definitely would have had an order right in this 30K level for sure. I had a line here, and I had orders here. I had orders here. I never reached some of these orders, but I got a decent fills right here. Now, this starts to get advanced, but it was obvious that we really didn't seem to get a 5-wave structure. We were struggling to break this median line, so I think I ended up getting stopped out when we got below that. So I think I put just my stop right on the other end here, and then I rebought in down here. And I think I have, again, orders lower. Hopefully that helps. These are the 3 main tools that I used. I just kind of showed you how I use them and how I identify areas to trade, and how I found it. Again, if all that was confusing, maybe rewatch it. And if it's still confusing, go to this guy. Maybe start watching some of his. He's got a Fibonacci retracement, guide, probably way better explaining it than I just did. If you're really interested in trading and doing that, this is the guy I'd point you to. If you're liking what I'm doing and you want to learn more of what I'm doing, these are the guys. Go to their uploads, go to their first videos. Because I say go to their first videos because they're easier to understand. He does a good job at going a little slower. And then as he gets into his videos, they start to get a little bit more complex, especially from an Elliott wave standpoint. And I would encourage you not to focus on it too much. I mean, if that's what you like, and you're like, man, Elliott wave is sweet, love it, can't get enough of it, then yeah, dive right in. I'm just saying that you don't need to know it super well to be successful with this strategy. What you need to be able to do well is identify pivots correctly and their relationship to each other to identify probable targets. An Elliott wave is a great tool to have in your arsenal because you can label it so that you know what you're working in. So yeah, those are the 3 tools that I use. That's how I identify trades. Hopefully this helps. Otherwise, now my next videos, I'm not really going to explain these items. You're just gonna see them. But hopefully, at least this video gives you something to grasp onto. If you are interested in my journaling, I don't know if anyone's even gonna watch this stuff. Doesn't really matter. Yeah, I figured I'd at least do one video that explains what I do. So there we go, fellas. Enjoy.